Hi, everyone. Jaming. Thank you, Patrick.
Hey, Coach, you feeling better?
It's going to take some time, Blake.
Oh man! All right.
Let's
Well,
see.
hey,
I want to get Ryan in here to talk about the BOE.
Yeah,
he's got
to split and get ready for the ECB in the ForexAnalytix community.
Go ahead, Ryan. So your reaction to the BOE, and did this put a ceiling in on cable? Ryan? Okay, well, I guess...
Oh, hello.
Oh, there he is.
Here I am.
All right, did you hear the question?
I think it definitely put a bit more of a dovish slant on things. It was a complete mess in the votes as expected. Was expected to vote 9-0 for hikes. It was 7 for hikes, 2 for unchanged. And then within that, 6 wanted the 50, 2 wanted unchanged, and 1 wanted a 75. So as we've been saying all week, a lot of indecision there. There's been a lot of incredulous. I can't say the word. People aren't really
incredulous.
Incredulous that people have actually, 2 of them actually voted to keep rates unchanged with inflation running up near 11%. You know, a lot of the market's now giving it the older WTF. I'll keep it polite. What does it mean moving forward? Who knows? It means potentially we're still going to get hikes. Are we going to get something more along the 25 pip range? I don't know.
Could this be the catalyst for Euro pound after this long base to start turning higher and break out?
It could be. If the ECB is hawkish, I mean, if they surprise with a 75, most definitely we'd probably be at 87 in a flash.
Oh my God, could you imagine?
Yeah, and if Lagarde does a 50 but she's still quite hawkish, there could be a bit of upside here for euro sterling.
Hey Ryan, I know you're going to split here in a second. Do you think that, and this is the question I really wanted to ask you before you left, you know, they're going to probably talk about some of the details of how they're going to, you know, roll off some of their balance sheet next year. Do you think they're going to give us a little bit more detail and a little bit more color than the market is expecting, which I would interpret as hawkish, because and maybe that might be a result of Powell being as hawkish as he was yesterday?
Yeah, well, you know, the QT thing is always of interest when it first comes out, and then everyone forgets about it. As Kay said on the Flow Show today, Powell didn't even talk about QT yesterday. No mention of it. Everyone's brushed it under the rug. I don't think it's going to be a big deal for the ECB. They're not going to hammer and tong it. If they do announce something, it's going to be slow and steady. I don't think personally we're going to get much detail today. More that talks are ongoing and they're going to kick the can to the new year, because why not? Don't need to worry about it now. So I don't think that's going to be the big talking point of today's announcement. You never know, of course. We always plan for the unexpected, but yeah, I don't think it's going to potentially be a big deal. And,
okay. All right. Well, hey, I just wanted to make sure that Dale squeezed you in this morning. I know you got to roll, and you're going to get over to the ForexAnalytix community and get hopping on making sure that we've got great coverage on the ECB. So thank you for that, and thanks for jumping in here today, Ryan.
No worries, mate. Just to throw in also, we've obviously got the ECB in about 10 minutes, and then before Lagarde speaks, we've got a big, massive data slate coming out. Manufacturing, Philly Fed, Empire, retail sales, jobless claims, a whole load of dollar stuff to get into before Lagarde. So factor that risk in when you're looking at the ECB.
Sounds great. Dale, I'll let you go from here.
Okay. What a week for 3 drives. So I thought we were going to go to 102.60, but and it still could. You know, we'll see what happens with the ECB, because the RSI reading wasn't so hot down here. But, you know, just the form of it is pretty good. And
speaking of which, Dale, I was mentioning you yesterday about 3 drives in the morning edge.
Yeah.
Because indeed we have several of them. I think you're going to also look at.
There's one, and go take a picture of 3 drives to the top there.
That's exactly the chart I mentioned before. But have a look at the Aussie USD as well.
Oh yeah, I did see that.
You
Yeah,
see?
yeah, 1, 2, 3.
Yeah.
Yeah.
You know,
So,
Steve, why don't you go ahead and just stick that knife in my back, since I got squeezed out right at the top yesterday. Just
Oh, I
go
didn't know
ahead
that,
and
Blake,
just
sorry.
stick it in the back, Steve.
I didn't
Go
know, bro.
ahead.
well, Blake, great call that false breakouts turn into failures, because it certainly, you know, and you had a rally almost right back to it when they
Yeah.
tried to bring it back after the Fed couldn't get to this trend line that the whole cosmos is watching. It looks ugly. And
You know, Dale, I was, and I'd love to hear what, you know, Steve and Stelios and K-Man have to say about this, but and thank you, but I'm sitting there last night and I was with Chris Weston doing the trade-off show, and I'm like, look, you know, central banks are still, you know, raising rates around the globe, and they're still tightening policy. So I don't understand why stocks are up here. And the Fed was very clear, and you know, and Powell was pretty hawkish. I didn't get it. I'm like, I don't think stocks should be up here. And, you know, he's like, so you wouldn't be, you know, buying stocks there? I'm like, I actually believe the Santa Claus rally comes after Christmas, but there we go.
Yeah.
All right.
Yeah,
Sorry,
you know, you're in good company. I don't know if you caught the Gunlich interview yesterday, but
no,
he said everyone was waiting for 4,200. He said, I don't think it'll get there. He's saying that you know, you could have double-digit returns with yield on bonds. So, I mean, he was a little early, but he's, you know, he painted a pretty bleak picture for risk. So,
wow.
anyway, I thought I'd let you know.
Oh yeah, I'd like to go back and listen to Gundlach. He's
good.
He's a, you know, he's a skateboarder, Dale. I gotta love skateboarders.
Oh wow, yeah. I think he's a Buffalo Bills fan too. He got a little tout on the Bills in there.
Nice.
So here's silver. You know, I was watching this yesterday. The gold silver ratio. Maybe it's reversing. I thought it was going to reverse here and then here. Maybe now. But you know what I'm really going to be watching on this break here is, you know, I've been pretty bearish Apple, and I think that, you know, it bounced when we were here. I was calling this a hope low. Well, you know what? It's still a hope low, because I think we're going to take it out and take these lows out. Maybe we're just going to wash out, and I'll know when I start getting some hateful tweets about a Dave H. Contrarian in my stream.
Yeah.
If we're at 3,700. Oh, Dave, you always say, you know, you changed it. You didn't think it would do this, you know, that kind of stuff.
You know,
Anyway,
Apple is one of those. It's probably one of the most, you know, you know, widely held asset in most portfolio managers' portfolios. I mean, imagine if Apple gets hit, and it really has not performed well in this rally back in equities. I mean, it's all been very heavy in, you know, the energy sector, and you know,
value over tech.
Yeah, exactly.
So we'll see. So I was talking about for a few days that really the miners were kind of forecasting with silver and gold making new highs. They were struggling. So we'll see what happens here. You know, I'm still bullish. I'd love to be able to buy a nice break in these miners. So we'll see what happens, and we'll see if this is it. You know, if the go ahead.
I was going to say, you know, we have the ECB decision coming up in about a few minutes.
Okay.
I thought we'd talk to
K-Man
and yeah, I'll grab the charts, but I thought we'd talk to K-Man and Stelios really quick, just to discuss, and Steve, to discuss the European Central Bank as we go into that. And remember, we're going to have, and here's the, here, let me pull up the euro really quick. And then just so you guys know, in ForexAnalytix, you can also go over to where it says, you know, here it says, calendar, data flash. You can pull that up and you can see what's coming up. We have the ECB decision coming up in just a few minutes. But let's bring in Stelios.
Hello.
Hey, good morning.
Morning.
So what's your take really quick on the Bank of England?
Yep.
How is it that you had two people voting when inflation is what's inflation for you guys?
10%, yeah.
You guys 10%. At like 42% year
a
over
healthy
year.
10%.
Guy?
Yeah,
Oh,
I was asked on the Flow Show earlier this morning. I said the Bank of England notoriously picks the dovish route whenever there's an option. And look, 2 people voted for no change with inflation at 10%, and also inflation in the UK is not dropping just like with the pace that the US inflation is dropping. US is ahead. In that respect. So how can you vote for a no change with a 10% inflation? I have no idea.
They were blanch flowered.
This is, yeah, they did. This is definitely dovish in my books, any way you look at it.
yeah, look at that. I mean, it's clearly like, that's crazy. Go ahead. I'm sorry, Sal.
Yeah. No problem. I would have been getting long euro pound today, but we have the ECB in a few minutes, so I'm waiting for that first. But I want to get long euro pound. I want to sell the pound against. Actually, I don't know against what. Probably against the euro, most likely.
So just to discuss the euro sterling really quick, you can see that 200-day moving average clearly support here. We're trying to pierce out of the triangle. Yeah, I mean, nice base of support. And you have Christine Lagarde, who's about ready to step up to the podium here in the next 19 minutes or so, and she'll start talking about bringing down the balance sheet, hopefully, and the market might see that as hawkish, and you might see the euro really bounce, and the euro is holding up pretty well. I mean, look, the euro is well above 106. What do you Steve actually marked the low in the euro when he came to the United States, and now from here the euro is probably going to go up to 150. So good job, Steve.
I know, mate. I know.
I'm personally looking at the euro pound. We have the 50 DMA currently at around 86.7. And we also have those previous highs at around 86.5, 86.6. So this is a level that we need to pass. And if Lagarde is not dovish, then I think we're going to go straight through.
By the way, just so you guys know, this is K-Man. He's not going to be able to be with us. He's actually jumping into the community right now. Between him and Ryan, they're in the Flowonomics room talking about this is like the macro chat room, updating their trades, also updating the news and research room. So Ryan and K-Man are going to be super busy. As you can see, they're putting in like the ECB press conference links and everything else. So if you want to know where what we're doing around the clock, jump in the ForexAnalytix chat room, because that's where we're at. Now, let me ask you guys, Steve, Stel, what do you guys think about the ECB here? I mean, what are they going to be doing, and how's the market going to interpret what we're going to get today?
Aren't we going to comment at all about Powell?
We can do that in a few minutes, but we got the ECB in like 2 minutes.
Okay.
So we can talk about Powell after that.
Okay.
Yeah, but how about the ECB? We got like a minute now.
Ryan asked me this on the Flow Show, and I said I don't know. I'm a bit confused with ECB, so I'm not it's not as clear to me as it was with the Bank of England. So, Steve,
you know
over
what?
to you.
It might have something to do with her tan. I think you got to look at the shade of her tan today. I mean, is she a little bit more tan? She's been spending more time in the tanning bed, or less time in the tanning bed, and I think that it's going to give us a lot of clear-cut indication on what the ECB is doing. One thing I would say about the price action in the euro is we are holding above 106. While we're above 106, it's really hard for me to be bearish. But at the same time, I have to say that the dollar index is getting a nice bounce as we are approaching the 200-day moving average. So, Steve, you have any thoughts on the ECB here?
I think Lagarde is by far the worst of the worst. She has done a horrific job. In my opinion, she's a legal placeholder. She has nothing to do with economics. And unfortunately, the ECB has not been taking decision based on economics, but every other factor in the world out there. So
perfect person to navigate through a crisis situation.
Yeah. So basically, my point is any assessment or assumption I would have made as an economist, it's impossible to make in this case simply because they don't take decisions based on that, right? So
got it. Well, we have literally 15 seconds here. The rate decision's coming out, Steve. So let's just take a real quick look and see what happens here. Market's expecting 50 basis points.
Yep.
How about if they get more? I don't think it's going to happen, but you never know. Never know with
Let's
Christine
see.
Lagarde here. You guys yelled out if it doesn't come up here.
2%. Yeah, 2.5, 50 base points. Yeah.
50 basis points.
Yep.
Okay, so we're not going to see any reaction here, so we have to wait for the presser. It came in as expected, and you know, Euro's not going to do much. So we'll just wait for it here and just, you know, as it comes up before Dale's.
I just want to add one thing. I'm about
Yeah.
to publish a blog post about the Fed and the other central banks. For me, the main theme that we're seeing now is slowing rate hikes. We've gone to 50. I think we're going to go to 25s on the next meetings. So this is something that's changing now pretty quickly. And I remain of the opinion that first quarter 2023, late 2023, first quarter, we're going to see inflation drop dramatically. So I think we're close. We're getting close now to terminal rates, to peak rates. And the question then is, how long do we stay there before we go lower? That's the question.
Sounds good. Okay. And now with that being said, let's talk about and I think, by the way, oh, Greg isn't here.
He's going to be here tomorrow, Blake.
Oh, he's going to be here tomorrow. Okay.
I don't have an interview, so he'll have more time.
Oh, awesome. Okay. And speaking of which, gosh, I'm sorry. I want to cover PAL. Euro's actually spiking higher, which is good because I'm long some Euro Kiwi. And I actually just added back what I sold today. If you guys didn't catch this on yesterday on the trade-off, I got long a bunch of Euro New Zealand down here. Sold some this morning near 167, bought some back earlier, just about 30 minutes ago. And I'm playing this on the long side up towards, 170. That's basically where I'm targeting. And if you guys are in ForexAnalytix, you can see the active pattern in play right here from yesterday. Go ahead.
Euro's looking strong because the ECB have hiked their inflation forecast quite significantly. For example, 2024 is now up to 3.4%, I think from 2.3%.
Wow.
So
give me one more high over 107, Ryan.
Yeah,
give me one more high.
I jumped into I copied I jumped into some Euro sterling at 24 just before the meeting.
Nice.
Boom, look at that. Very, very nice. That's a really good trade based
14 pips up.
Yeah, I was gonna say based on a more dovish.
It's not too late to do it here either. It's one of those things that you're price sensitive all the time. Sometimes you just have to sell them and you just have to buy them.
Yeah.
You know what I mean, Stel?
Absolutely. Don't be a dick for a tick, like we say.
Oh, I've never heard that one before. I like that. I want good one.
And he who finesses wears dresses. That's another one.
What's that one?
Thank you so much.
He who finesses wears dresses.
Yeah.
Those are old life law sayings and market sayings over here.
Yeah.
Actually, you know what, guys? I feel like a little left out at this moment. I'm going to have to pick up some Euro sterling, and I'm going to be buying dips here too. So I just bought some.
What's the difference?
Yeah, I don't want to be a dick for a tick. You guys got me all convinced. I just picked some up as well. Hey, so let's turn our attention to PAL, Steve. Since Steve is really, really anxious to talk about J Powell. Hey, he sounded pretty damn hawkish yesterday, right? I mean, where is
don't say that we hadn't warned about it, right?
Right. Well, why did it take the market so long to really understand that he freaking means business, man? I mean, what do you think?
For the same reason that usually when you tell somebody that their wife or their husband is cheating on them, their initial reaction is not to believe you.
Nah. Not to me. Never.
Yeah. It's because people don't want to believe what they don't want to hear. You know what I mean?
Okay. So tell us what people don't want to hear about what's happening in the markets right now.
The S&P is breaking down under 39 and
they don't want to hear that rates have a much higher chance of staying higher for longer than they would have hoped for.
So here we are, and what does that mean for what does that mean for the S&P? My opinion is it means that we do break down here eventually below 3,900. We do have options expiration though tomorrow. Huge expirations are going off tomorrow. Do you think that's going to have any effect on the market, you guys? Like, I think we're going below 3,900. I think we're going to trade down here next week. I think we're going to trade down around these levels next week. And then you can buy, you know, for a bounce going into Christmas.
I agree. And I think we're too close to this level now, and it's going to act like a magnet, and option expiration is going to probably be the trigger. And you can pretty much tell that this is a pain trade now for it to go lower. So I agree with you 100%.
Yeah, it is, right? And I mean, how many people, and Dale, going back to Jeffrey Goonlock and his ideas, I mean, FOMO is a real thing. I mean, the markets, you got people that are chasing the market despite, you know, despite the idea that hey, look, we're heading into probably a pretty massive recession, and the Fed's not going to be accommodative, nor are other central banks, because inflation is going to be still elevated by the time we start feeling the recession. So they're not going to be able to really move much. So we're going to be in restrictive policy as the economy is significantly slowing. You don't want to face the music, so you still want to be long stocks because you can't be underperforming in your portfolio. Those people are going to get screwed, right? I mean, what are your thoughts here, guys? Not everybody at once.
I can't add anything because I agree. Yeah,
okay, well,
really
all right.
yeah.
Well, then, you know, so let me ask you guys.
So maybe we're going to take out the October lows in January.
What's that?
Maybe we'll take out the October lows in January.
36.
You think so? You think we're going? You know, I believe that that the stock market, you know, the S&P is eventually going to trade to this level right here around the 3,300. That is the head and shoulder pattern completion. It is probably channel support, and you can see it's the COVID breakout point. Some people are targeting.
It would be
down
a 3 too, Blake, down there.
What's that?
It would be a 3.
It'd be a 3 drive.
Yeah, you had the July low, you had the October low, and one more low would make it a 3 down there.
Got it. Well, you know, I think we could very easily see somewhere down here in the coming, you know, months ahead. You know, do we short today? I don't know. I'm a little nervous with options expiration. But Steve, let's go back to Jerome Powell. What did he say yesterday that really, you know, struck a nerve with you, or has you, you know, believing that really he means business? And by the way,
the most important thing is that he has maintained the exact same tone he has had for, like, what is it now, 5-6 months?
Yeah.
And hasn't budged and hasn't backed off that. And in my opinion, this consistency is the most important element of all.
Yeah. Okay. Hey, Tulin writes in, he goes, Doomsday have been saying 3,200 for 2 years. And I don't think they're wrong. I mean, you know, but you have to play it tactically, right? Like we were long risk all through from the 3,600 to 4,000 range. You know, you got to be able to realize that, you know, we don't go down in a straight shot, but we've rallied to really key resistance, and it looks like we're going to roll over at key resistance, you know, as, you know, a bearish and a bear market, you know, would do. I mean, it just seems like very, very logical to me. So, all right, well, Stelios, what are you going to do with this Euro Kiwi? I'm sorry, Euro Kiwi. That's me. But Euro pound as it moves higher. Where are you going to be taking profits? Because I want to know, since I just bought it about 10 pips ago.
Well, 2 levels I see. One is very close. The other one isn't. One is the 50 DMA, which is around 86.7. Okay. I think that's probably going to go. No, the main area where I think we're going to find resistance is 88.1, which is the November highs. So
you know, so what I'd be looking at for today, me personally, like if I can get it, I'm going to take it. Me personally, like if, you know, in one day, if you can get a move that looks like this to the 50% retracement, previous support, you know, it puts us about another 40-50 pips higher than where we're currently at. In the Euro Sterling, which, you know, pip for pip move is, you know, the average, the ATR is going to be a lot less than you take, like, you know, the pound yen or something like that. If you can make a 50-60 pip move in the Euro Sterling intraday, I'll take it. So if I can get out around the 86.80, 86.90 level, I'm going to take my pence, get it? My pence. Get it? I'm gonna take my pence and run. But I like it. It's a really clean breakout, and the divergence between those two central banks right now is pretty damn clear for the day, right? So I think that's
in the short term, yes. I think further down the road, both central banks are going to get quite dovish. But for now, for the next, say, month or so, until the next Fed meeting, I don't see anything that's going to be changing dramatically.
Okay, so, and as Ryan pointed out earlier, and I want to make sure that we do discuss this in about 5 minutes. We got retail sales, Empire State Manufacturing, Philly Fed, unemployment claims, data,
and Lagarde as well.
And we get to see how tan, Christine Lagarde is. Is she tan or is she not? I mean, it is December. She's going to be like uber tan. Yeah, I mean, how much time does she spend in the tanning beds right now? I'm going to say a lot.
Are you nicking my jokes? Do I need to put up my tanning guide?
So Ryan, what now that you're here, what is the most important data that you're going to be watching as we have the data that's coming out today?
Yeah, all of it's important. The manufacturing stuff, because it's the first of the new month. But obviously retail sales are probably going to be the big number to watch for there. We are in that holiday numbers period. So November and December, you got to take them together for all the Thanksgiving, Black Friday, Cyber Monday sales of November. And then you take it with December with all the Christmas stuff. So it's a big 2 months of retail sales to see whether the consumer is continuing to spend. This
doesn't mean anything at all. But I'm going to tell you guys anyway. I was in Costco the other night, which is, just, it's like I try to avoid the people, but it's like at night, I was there and I'm like, man, I talked to the cashier and I said, this is like the quietest I've ever seen, like Costco in the evening, and it's December. She's like, this is the slowest holiday season I've ever seen. And I've been here for 20 years.
Wow.
Yeah, that just from the cashier lady, that was checking me out. I was like, wow, that's crazy. All right, so I'm thinking consumer spending. Steve's mentioned it a lot about. I think both Steve and Stelios talked about like credit card spending. Yeah, we've talked a lot about it over the course of the last few weeks, and last actually couple months. How it's increased quite dramatically. I've talked to a lot of families that are like, oh yeah, I've talked to my parents and we're just not sending gifts this year. Things like that. I've heard a lot of that, and it's not like it's just with people that I know, and so it's going to be interesting to see how the consumer fares in this environment in the coming months, and that's, I mean, those are just once you start to see consumer spending really start to slow. It's going to weigh on, earnings multiples moving forward. And I think next year is going to be a really tough year for earnings. And that's why, being long equities is a pretty big risk. So I think you short rallies. If we see a rally today in equities ahead of options expiration, I think you got to sell into it. Hey, we got less than 2 minutes. Steve, Stelios, Dale, any thoughts before the data comes out?
Canada looks like it could rally to new highs. Maybe up towards 140 for a 3.
The dollar CAD, this 618 it's at 137. It's been capping. I'll tell you what, if we see a move above that, and that you called crude oil perfectly this week, Dale, and if crude rolls back over, maybe we do see a spike higher in the dollar CAD, finally breaking that 137 level. So I think it is worth a watch, especially if if crude oil does weaken. So good eye.
And risk off.
Yeah, with some risk off. Steve, Stel, any last minute thoughts here before the data comes out?
Not really.
Okay. Let's pull up a couple of different charts. You're going to see right here the dollar. I'm going to pull up gold over here.
Yeah, this is great action for people who missed the first wave in, things like the dollar and the metals, or got out early like me and tactically got short and got run over, that you could just, get your buying list, your shopping list ready for after this liquidation ends. And the things that hold up the best that aren't making new lows are your prime buying candidates.
And remember, we do have the ECB press conference starting here shortly. So just a heads up for that too. Data's
we have
coming out.
Carly Garner.
Oh, here, data's out. Empire State. Woo, that's a mess. That's going to goose the euro a little bit.
Oh, someone jumped off the
Retail
Empire State
bad.
Building.
Oh
Ooh,
yeah, there's a
man.
lot of red.
Oh, the cashier knew.
Oh, look, hey man, you know what? Stocks,
Ooh.
believe
Look
it or
at Empire
not,
State's manufacturing index.
Yeah.
believe it
still
or
have
not,
Philly
stocks
Fed
are going to
coming
like
up.
that data. I mean, this is I don't know if you really want to be buying stocks, but you know, the thing is the stock market will like the fact that we're getting some weak data. So
Yeah.
Philly Fed minus 13.8, so that's also
Wow.
worse.
wow. All right. Well, S&P is, you know, coming in a little green. Dollar index is weakening. You can see gold is bouncing. And don't forget, guys, we do have the ECB happening right now. So we're going to be watching that press conference as it's happening over at the ForexAnalytix, community. I know Ryan and K-Man are going to be all over it. And let's go Euro Sterling. Let's get that rally going. What do you guys say? I'm long with you. You know, look, I'm just joining the party with you guys. That thing is that thing's on fire. All right. Hey, if you guys want to learn how to get, you know, into ForexAnalytix, well, and you want to learn how to trade our money, go to the trader funding program. Make sure you go to this link. I'll put it in the chat box. You get ForexAnalytix included because we don't want to leave you hanging by yourself. You know, you're trading our money. You know, we want you in our community so you can talk about what you're doing and have some good ideas. And then also, if you want to try out ForexAnalytix, we have one of my friends that I met in person, had a beer with, met his son, Jethro. He's an old fighter pilot. We had a beer like maybe 5 or 6 years ago. He's back in our community as of this week. So it's nice to have him back.
They all come back, Blake.
Yeah, it's nice. He just popped.
It is
Derek's like,
nice.
hey, I haven't seen you guys in a while. Glad to be back. And it's like,
Yeah.
man, good to have you here. So that's old Jethro. So guys, I'm going to say have a great trading session. Thank you all for hanging out with us. Dale, have a great interview with Carly.
Thank you, Blake. Thank you, team. Nice call on Europound live for everyone here to have taken advantage of it. And Carly, welcome back to F.A.C.E. Great to have you.
Thank you. It's good to be here, Dale. Good morning.
I'm a fan.
Oh, thank you. Likewise.
So I'm interested what's on the menu, but before we get started with that, I recall last time you were here, you were looking for a dollar top. You and I think it was 112 or so, and we had that one more push up to 114.
Yeah.
And you weren't here, but you know, I know people that see you and follow your work, and when they tell me what you're doing, I pay attention, and you were calling for the dollar top up there and looking forward to trade under par. Is that still where you're at?
That is still the case. Are you ready for me to share my screen?
Yeah.
Or no? Okay.
Sure.
Let's do that.
So very nice forecast. I was kind of thinking we might get some kind of rally from the 102 level, just because it was such a prolific bull market, that there'd be some echo strength. I mean, we've already come off 12 figs in a month or so. Do you have anything there for a rebound, or we're just going to head right to 97?
Well, can you see the chart?
Yeah,
here that
it's
I'm
a
showing?
beautiful
Okay,
chart.
perfect.
Yeah.
Okay, beautiful. Okay.
Okay.
So my window's a little small, but you can see this line here that showed potential top at 114. Now, to be honest, when we were trading in these areas,
Yeah.
I was a little iffy. I mean, that was a ridiculous move, to be honest. It took
Yeah.
a lot of things to align for that to happen, but it happened. And sure enough, that area hold. And now what was key to me is a break below 105. So this area right here was kind of a more reasonable trend line. So you take out some of these outliers.
Right.
So this trend line is significant to me, and I see it as a pivot. If we stay below 105, then I think as long as that continues, we're headed to 97. Now, you know how this is. It generally isn't a smooth ride. It's not a straight shot, but that's the projection. If we do break above 105, we're probably looking at some digestion. I don't really expect it to get much above, somewhere around 109, somewhere in there.
Okay.
But let's see what it does with 105. Basically, slightly bullish above but pretty bearish below. And I think the ultimate target's 97. So we'll see how that goes. The RSI, this is a weekly chart, by the way.
Okay.
RSI still shows some room to move. And so that's where we sit.
Okay. A very nice looking chart, and had a different pivot than me, but I really like your lines. So people take a screenshot or watch a video later. So, okay, what do you want to move to now? I bottom picked the crude. It's, we
Okay.
kind of think a lot. You and I, kind of contrarian, inflection point type of, that's what we look for.
Right.
What are you thinking here?
So I actually shared this chart on Mad Money on Tuesday night, I think it was. This chart and a few others. This is crude oil.
Yeah.
This is a weekly chart.
Okay.
And basically I may or may not have mentioned this on our last interview, but the overall premise to me is, had we not had COVID, which was, I think we can all agree, a black swan event, and then had we not had the Russian invasion, which also, in my opinion, is a black swan event, oil probably would have been trading in this trading range. But we had those events that pushed us outside, and eventually we came back in the range. The range started from 40 to 65. It's inclining. So now we're looking at 70 and 95 as this range. And unless there's another black swan event, I expect that to be the range. So that 70 print, I think, was probably the low. I mean, you know how holiday markets are.
Can't trust them.
You can't. That's a good way to put it. You cannot trust them. So I cannot say that was the low and we're just absolutely going higher from here. I really wouldn't be shocked to see a retest, and maybe even, sometimes oil treats trend lines like suggestions, not rules. That's just the type of market it is. So I wouldn't be shocked to see it come down and past 65, which is the 200-day moving average. But the big picture is we're in the process of bottoming, in my opinion. I could be dead wrong, but this is what I'm thinking.
It's not just your opinion, because I saw Mark Fisher of MB Trading. He's kind of a legend, isn't he? And so he was either in F.A.C.E or saw your piece on Mad Money, because he's pretty bullish. He said,
"Oh, cool."
He just can't, no guarantees, but it just made sense at those levels. So
sure, it does.
Anyway, okay,
it makes sense. Yeah.
Yeah. Can you make sense out of what's happening with precious metals with today? Are we finally going to see some type of correction, or whatever else you wanted to show?
Sure. No, we can go to precious metals. So this is a weekly chart of gold, and gold has been kind of disappointing for a lot of people. It just has had a hard time. I mean, this isn't an environment where you would assume gold would perform very well, and it hasn't, mostly because the dollar strength. And now that the dollar's starting to roll over, gold has been helped out a little bit. I honestly, in the long run, I'm bullish gold. I think we're going to 2,100 or maybe even higher. One of my friends, Bob Iacchino, mentioned on Bloomberg the other day, 2,800's in the cards for next year. And honestly, I don't think he's that off base. I think it is possible. I think what happened is the higher dollar basically just kind of acted as a weight or a plow hitched onto the market. And now that if the higher dollar is behind us, which I think it is, that'll just kind of unhitch the plow and it'll allow metals prices to move higher. So long run, I'm bullish. Yeah.
Okay. So your key level on a pullback is that red line?
Yeah. Yeah. So this is the chart. Unfortunately, the chart's not as easy as that. The chart is really messy. So we're hovering right here. This is a trend line, dates back to 2018, and it's just a real simple, nothing magic here, trend line. And we're basically right on that. I consider it a pivot area more than necessarily a trend line, but that it is a trend line. So basically above it, which it's right now, it's about 1780. Above it's bullish, below it is bearish in the short run, not long run here. We're talking days and weeks, not months. And we're just right there. So it's 50-50. If it does pull back, I'd love to see it hold 1700. If it holds 1700 on a pullback, that is very bullish, because that puts these support levels in play and kind of takes away the bearish sentiment underneath. So I'd love to see it hold 1700. I think if anyone that wants to be long gold could maybe, watch to see what it does at that level to just maybe take some action.
Yeah, that could be some people talking about that would form a right shoulder there with the neckline being the recent highs.
Yeah,
Can you
absolutely. I see it.
visualize that? Yeah.
I see it. Yeah, you're right.
Okay, so silver's
Even better.
outperformed. The chart's got to look better. Yeah. But
Yeah.
look at, oh, okay.
Okay. Now these charts are pretty messy. I have a lot of lines on. Honestly, this year's been so messy that there's just a lot of things going on. Silver's a little bit, silver's more unruly than gold. So the chart tends to be a lot messier, but this is basically the same general pivot line. You do see during COVID, silver just went off the charts
Right.
nuts down here, but that's how silver is. So silver did hold its pivot line. It's trading below. I do think in the short run, we probably pull back. I'd love to see it hold the 200-day moving average, which is, whoops, somewhere
Weekly.
around 21. Yeah, this is on a weekly. I'm sorry, a 200-week
Okay.
average. You're correct.
Okay.
$21. So as long as
Okay.
it stays above $21, I think the trend change is in effect. And ideally, if you're a bull, you want to see a break above 24. I think that's where kind of the floodgates open. If it gets above 24, 24.50, we start looking at high 20s. And to be honest, I think at some point this year, we're going to see low 30s. So that'd be way up here.
Okay. All right. And how about risk, Carly? S&Ps? Dow? Any stock index that?
So, yeah, it's the next couple of weeks in the S&P is going to be really tricky, but it's also going to be very telling because seasonally, we all know Santa Claus rally, triple witch rally, or quadruple witch, whatever you want to call it. Usually the market goes up this time of year because usually the pain trade is higher, and that's just kind of how it works. I've kind of concluded throughout my career that what I think is happening is the market just really thins out. The traders are gone. It's more the buy and holders are sitting there enjoying their holiday dinners. And it's the few traders that are left in the market. They generally are probably short and they just get squeezed out. And so that happens more often than not. What happens this year is who knows, but the odds are probably get a little bit of a short squeeze at some point. Chart wise,
do you think we could trade down to your blue channel line at the bottom?
I think that's
some
something
intersection there.
Yeah, I do think that's something that could happen next year. So the first big support level is going to be about 38.30. If we break that, and I'm not saying the next couple of weeks, this would take some time. If we break that, we're looking at like 34s, 33s, depending on how fast it does it. This is kind of pretty similar to what your previous speaker was talking about. So I do see that as a possibility. Wouldn't be shocked. We've seen, markets like to put in bottoms in March. It just happens. Don't ask me why, but it happens a lot. So I wouldn't be shocked to see a rough February, January period, and then maybe in March we kind of capitulate and finally get this over with. And that would probably look like some test of this blue line, or maybe markets sometimes just get out of hand. And so if that happens, we're probably looking at somewhere in the 32s. I wouldn't be surprised to see that, but if those levels were seen, I'd say that's probably a really good place to consider getting aggressive on the bullish side.
I like that cyclical march, into the spring equinox.
Right.
So why don't we talk about something else that may have shifted? You have a view on TLT or bonds? Had a tremendous rally. It's really not giving back much. Would you be a buyer on a break here in the bonds?
I believe so. Believe it or not, the last, basically the month of December is actually generally seasonally bearish for bonds, and we haven't really seen that. It's just we've been holding gains. I mean, it hasn't been rallying like gangbusters, but it's been holding gains. So that's a bullish sign to me. Also, the bonds aren't reacting the same way they used to Fed's, Fed's hawkish talk. The Fed comes out and tries to talk the bond market down, and it actually has been going up. So that's kind of a big shift in tone. And I think that, I think that the trend has changed. I think we wiped out. I mean, that was really painful for a lot of people, traders and investors. That was brutal, myself included. So
I tried them early too.
I mean, but who? Well, at these levels, they said this was like the worst year in bonds since 1870 or something. I mean, so who could have seen that coming? That's just insane.
Abe Lincoln wasn't,
There you go. So this is a
All right.
really big trend line that dates way back. And so we're looking at that. Currently, we're poking above it. As long as it stays above that, and it's about, we'll just call it 129. As long as it stays above 129, I think it looks really good for continued grind higher. If we break below 129, I think this stuff is behind us. I think we're not going to see that kind of painful crash, for lack of a better word. But we could see the mid 20s in the 30-year bond future. But so this is not TLT. Obviously, these are futures. They're priced different. But just to give you an idea, basically, things are looking pretty good. And as long as we don't get any real dramatic sell-offs from here, I think it's just grind higher. And I'm going to pull up the 10-year note future just real quick so you can see how dramatic this move has been. We need to see the 10-year break above about 115. If it gets above 115, I think that opens the door. And I think we could return at some point. This is going to take a long time, but at some point, I think we get all the way back up to the 130s. So we're talking about yields.
260.
Yeah, in the twos, maybe even the high ones is not out of the cards. I know it seems impossible now, but you know, these things, since the Fed's
mean reversion trade.
Yeah, exactly. And since we, you know, let's just say the Fed's been interfering with things, the volatility has just gotten bigger and bigger and bigger every year. Let me see if I have this monthly chart here. You can see this is pretty much the square. Is where the Fed started really getting involved. And you can see we went from, when I first got in this business, a 1 point handle in the bonds was like a huge day. If you saw 2, that was probably blowing up a lot of accounts. Now we're not, I mean, 1 or 2 handles is nothing. We see these kinds of moves all the time. It's just, the volatility is just so massive. And by the way, I'm glad I pulled this chart up. So in the bond future, we need to print about 135 or so to get back into the more normal range. It kind of wipes out that silly crash. Yeah, exactly.
It was a crash. Yeah,
it was.
Okay. Well, gosh, some great looks, and you know, really appreciate all your views, Carly.
Sure.
So best way for people to, I know you're a broker, so if people want to trade futures, trade options, they can do it through you and your IB. You want to let people know how they could get a hold of you to do so?
Absolutely. So we are an introducing broker. We're basically a boutique futures and options brokerage. This is our website, decarlytrading.com. We offer full service brokerage as well as discount online. So the difference between trading with us and trading with a bigger house that you've maybe heard of a little more is we are much more hands-on. So we charge $1 or $2 extra for online trading, but we answer our phones, we answer our emails, and we're not just clerks answering the phones. We actually have, we don't know everything, but we know a lot. We have a lot of experience, so we can make sure that everyone's questions are answered, things are running smoothly, and give people the best chance to survive, because we all know this is not an easy business.
Yeah, you know, I'm going to give you a tagline I used to use when I was a broker, and you could use it. It's my Christmas gift to you.
Okay. All right.
It goes like this. It's not what it costs you to clear a trade. It's what you clear on the trade.
Thank you. Yes, I love that.
You want to use it?
I might use that. Yeah, I'm jotting it down now.
Anyone like that?
Yeah.
I mean, of course, you don't want to pay 10% commissions like you have to buy physical silver, but I did it anyway. If you want it, you do it. You know, you just buy them. But anyway, that's really the truth, because you could get bare bone service and clear cheap and blow yourself up, and commissions weren't the problem. So
correct.
The problem's knowing how to be tactical in the market and manage risks. So
exactly.
Appreciate you, Carly. Yeah,
thank you. My tagline is usually you get what you pay for. So it's the same thing. I talk to a lot of people that 99% of the time they don't need someone to help them. They're just trading online. It's no big deal where they're trading, but it's just that 1% event. Maybe their internet goes down, maybe their platform goes down, and they need someone and they can't get someone. And that's where it gets really expensive to not be with the right broker.
You know, maybe it's better if you don't need someone, but that you gain insights by talking to people that have wisdom and ideas, since we only have 2 eyeballs.
That is correct also. Yes, thank you.
Anyway, so there's your commercial today, Carly.
Perfect. I appreciate it.
And I really appreciate you being a contributor to F.A.C.E over time, and
course.
the great views that you edify our community with. Merry Christmas, Carly.
Thank you. Merry Christmas. Thanks for having me.
All right, Happy New Year.
You too.
All right, everyone should follow Carly, check her out, and you could be with the team in a half an hour on the Morning Edge. Thanks for all your well wishes with my virus, and I'll see you guys tomorrow. I think I'll get up and hang out with my cold with you guys tomorrow. Oh, thank you, Paul. Patrick, take it easy. Mary, Steve Volge, love you, buddy.